Hi, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore the other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the LionGlobal Short Duration Bond Fund. This video is done as a follow-up request from a viewer's comment in my previous video covering the Fullerton Short-Term Interest Rate Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. At the same time, I think there is an increased interest in this fund because LionGlobal investors recently announced that they will be launching a listed share class of the fund as an active ETF on the Singapore Exchange. So there are quite a few sponsored videos and articles on the web currently talking about the fund. I would like to reiterate here that this video is not sponsored by anyone. So I don't talk about promotional contents and I don't follow a scripted message like some others you see on the web. Instead, what you will get from this video, as with others in this series of videos that I have done, is my absolutely biased comments on what I really think about the product. I will certainly bash the bad stuff, cheer on the good stuff, and question things that are confusing to investors. So, hope you find this useful. LionGlobal Investors is a Singapore-based asset management business that was rebranded in 2008 from Lion Capital Management and is the result of the merger of the asset management businesses from OCBC and Great Eastern in 2005. OCBC is the second largest banking group in Singapore, while Great Eastern is the largest and oldest life insurance company in Singapore and Malaysia. Great Eastern and LionGlobal Investors are both subsidiaries of OCBC. LionGlobal Investors currently has about 75 billion Sing dollars of AUM, with core competencies in long-only mutual funds and ETFs across fixed income, equities, and multi-asset solutions. Given the nature of the setup, there is a notable tilt in the product offerings towards servicing OCBC retail banking business and the private banking business under the Bank of Singapore or BOS entity. LionGlobal Investors also has several collaborations with other local and overseas financial firms to launch market or thematic focused products. The LionGlobal Short Duration Bond Fund is set up as a Singapore open-ended standalone unit trust. Because of this legal structure, the prospectus is dedicated only to this one fund. The fund is registered as a MAS authorized scheme, which means it is suitable for retail investors. The LionGlobal Short Duration Bond Fund lists only one manager in the fund webpage. That is Chu To Chia, who is the head of fixed income and multi-asset solutions in the firm. Interestingly, the prospectus additionally has Jessica Soon as the co-manager for the fund. The bios of the two managers are available in the prospectus as well, and it can be seen that both of them have a long industry experience, especially in the fixed income asset class. Morningstar shows To Chia has been managing the fund since 2018. And strangely, that also doesn't show Jessica as a co-manager. Nevertheless, having To Chia as the lead manager for the fund for about 7 years now shows the importance of the fund strategy in the firm. The investment objective of the LionGlobal Short Duration Bond Fund is stated in the fund webpage and fact sheet, and is actually quite elaborate, so let's take a moment to go through its components. The main objective is stated as providing total return that is a combination of capital growth and income, without prioritizing one over the other. This suggests the fund considers bonds from both cheapness in price as well as attractive yields, although this does not necessarily impact the decisions on how much distribution to pay out. The investment time horizon is stated as medium to long term, which means investors need to be comfortable to stay invested for at least 3 years to ride through market volatility. There is also some information on the expected portfolio exposures. It is stressed that the fund will invest in Singapore bonds, so that is expected to be the primary exposure. The mandate allows for global exposure though, as with most Singapore-focused or Sing dollar-focused bond funds, because the Singapore or Sing dollar market is simply too small to find enough investment opportunities. The fund has no target industry or sector and can invest across both investment grade and high yield bonds, so this looks like a pretty flexible mandate. One thing missing is the constraints on the duration considerations, as this is a short duration bond fund. So let's go through the fund prospectus to find out more. The duration constraint is mentioned in the prospectus under Investment and Focus and Approach section, where it is stated the fund will generally keep the weighted modified duration of the portfolio under 4. This is slightly high, although I would expect the fund to keep duration below 3 normally, as with what most other short duration bond funds do. The fund adopts combination of top-down macro view and bottom-up credit selection process. It is good for the fund to elaborate the key considerations in the processes here. The top-down approach uses fundamental, technical, and valuation analysis to derive macro decision on country allocation, duration, yield curve positioning, and currency. The bottom-up credit selection process focuses on detailed research on the company's business, financial, and credit positions. Risk management is also stressed here, in particular 5 areas, namely country, duration, interest, currency, and credit. The fund interestingly has different benchmarks for its Sing dollar class and US dollar class respectively. The Sing dollar class uses 3-month SORA plus 0.35%, while the US dollar hedge class uses 90 days SOFR plus 0.5%. Most funds will typically just use a single benchmark and maybe work out a currency hedge return on the index accordingly. We will see how this impacts the relative performance of the fund share classes later. 3-month SORA is commonly used as a reference index, especially for mortgage loans in Singapore, so the data is readily available on the web. Here is the data from DBS Mortgage Loan website, and it shows 3-month SORA has declined quite significantly in 2025, from over 3% in January down to just 1.56% in September. This means the Sing dollar class of the fund has a target objective of 1.56% plus 0.35% equals to 1.91% on a 1-year forward-looking basis. SOFR rates are even more readily available as the US Fed rates are used globally. Here is the data from the St. Louis Fed that shows the 90-day average SOFR is currently at 4.36%. This means the US dollar class of the fund has a target objective of 4.36% plus 0.5% equals to 4.86% on a 1-year forward-looking basis. Given the Fed is broadly expected to cut rates soon, this number should also be moving down accordingly. The LionGlobal Short Duration Bond Fund was incepted in 1991 and therefore has a longer track record than many other peers in this category. The current AUM is a respectable 1.73 billion Sing dollars as of end August. The fund webpage does not have the actual portfolio information, so let's refer to the fund fact sheet for details. Looking at the July fact sheet, we can see that the fund has about 40% Singapore exposure and is almost fully exposed to Sing dollar currency. This shows that this is really a Singapore and Sing dollar focused bond fund, so it may not be suitable for investors looking for global exposures. The rest of the country exposures look to be Asia tilted as well, possibly a result of sourcing for Sing dollar bond issues. There is about 9% cash in the portfolio that I suspect is due to temporary subscription inflows that are not yet deployed, as the fund is getting investors' interest currently. On sector allocation, we can see the fund only has about 9% in sovereigns, so the fund is currently focusing mainly in corporate credits. The largest sector exposures are financial and real estate, totaling 2/3 of the portfolio, and is a reflection of the current construct of the Sing dollar bond market, whereby most of the bond issues come from companies under these two sectors. Therefore, the fund doesn't look so diversified from sector perspective, but this is really a market constraint. The resulting portfolio has a decently high average credit rating of A- and a weighted duration of 2.25 years that is well below the 4 years constraint stated in the prospectus. Average yield to maturity is 3.18%, although investors should expect this to move down progressively as well following the movement of SORA. There is also a footnote in the fact sheet that further discloses that on an unhedged FX basis, the yield to maturity is 2.66% in Sing dollars and 5.51% in US dollars. We will see how this impacts the fund distribution yield later. Morningstar shows the fund has no high-yield bonds in the portfolio. However, about half of the portfolio are unrated bonds, which are common in the Sing dollar market because issuers sometimes don't bother getting the bonds officially rated by the rating agencies, as the market is small with limited investors. In this case, the fund should have an internal rating assessment process to determine the appropriate credit ratings for these bonds. I didn't see this mentioned in the prospectus though. The top 10 holdings in the fund gives us some additional color on the fund strategy. While allocations of the top 10 holdings look a little big for a bond fund, there seems to be a soft cap of 3% per holding. We can also see that the fund can invest in other LionGlobal funds, and there is no restriction or limitation mentioned in the prospectus. This is typically more for convenience sake to add diversification easily and quickly into the portfolio, although I generally like funds to avoid doing this unless necessary. For example, the LionGlobal Sing Dollar Liquidity Fund here makes more sense as a cash equivalent placeholder that can be added or reduced easily for liquidity. The LionGlobal Singapore Investment Grade Bond Fund, however, makes less sense to me, as it seems to be a clear replication of the main strategy of this fund, so I am not sure if there are overlaps in the positions. The top 10 holdings also are mostly issuers that are the banking and insurance and property companies familiar in the Singapore scene, so no surprise on the high sector allocations in financial and real estate. Morningstar shows the fund currently has only about 200 holdings in total, which is considered quite a small number for a bond fund. The LionGlobal Short Duration Bond Fund is currently available only in base currency Sing dollars and US dollar hedged share classes. A refers to the retail share class, and it currently has a management fee of 0.5%. Adding other expenses gives a total expense ratio or TER of around 0.57%, which is on the low side for active bond funds. Up to 60% of the management fee may be paid by LionGlobal investors to distributors as trailer fees. The fund allows distributors to charge up to 3% subscription fee. Although for a low return bond fund like this, I think 0.5% or less would make more sense. The earliest share class is the quarterly distributing Sing dollar class, having incepted in 1991. The fund then subsequently launched the accumulation class and the US dollar hedge share classes. Most recently, it also launched the monthly distributing Sing dollar class, given the monthly frequency is more popular to retail investors these days. Distribution history and yield of the share classes of the LionGlobal Short Duration Bond Fund is available in a separate Excel file for downloading. The Excel file is comprehensive and contains all the LionGlobal funds sorted by tabs, with each tab having the distribution history of all the share classes of a fund. There is also a summary below giving the underlying portfolio yield and the payout yield, even the annualized volatility of the fund. We can also see the payout amounts get adjusted quite actively, so do expect to get some fluctuation in the income you receive from the fund over time. Based on the Excel file, I extracted the annualized payout yield since inception of the share classes as shown here. I also grabbed the 12-month yield of the share classes from Morningstar, which will be more accurate for what the fund is currently paying out. We can see the fund is currently having around 3.6% to 3.7% payout yield for the Sing dollar share classes, and a slightly higher 3.9% for the US dollar hedge class. The US dollar hedge class does have a negative currency hedging cost that I think should be factored into the NAV. These current payout yields are on the higher side compared to the long-term average yields, And given the distribution amounts have been revising downwards compared to the start of the year, these payout yields will also get reduced going forward. Looking at the historical NAV movements, it appears that the fund is keeping NAV within a tight range with no visible NAV appreciation. So pretty much all the gains in the fund have been paid out as distributions over the years. The range was shifted down after the market correction in 2022. The US dollar hedge class shows a similar picture, with the exception that there is a slight NAV appreciation over time, because in this case, there is a negative currency hedging cost factored into the NAV. The LionGlobal Short Duration Bond Fund provides a cumulative performance chart comparing against the benchmark in the fund fact sheet. It is clear from the chart that the fund has quite comfortably outperformed the benchmark over time, making me wonder if this benchmark is too conservative to be used. There is unfortunately no charts available for the US dollar hedge share class. The fact sheet also provides a performance table across various time periods and has all the 5 retail share classes in one table for investors to easily refer to. I will cover up the lines that include an assumed 3% subscription fee because those are completely useless when trying to compare the fund performance. Also, if any distributors try to charge you 3% subscription fee for this fund, you better change to another distributor quickly. Let's look at the Sing Dollar class performance first. We can see the share class has nicely outperformed the benchmark across almost all time periods, with the exception of 5 years where it lagged by a small 0.26% per annum. The 4.25% per annum for 3 years and 5.4% of 1 year gives an indication of what to expect of the fund during higher interest rate environments, while the 2+% per annum for 5-year and 10-year gives an indication of what to expect of the fund during lower interest rate environments, which we may be getting into soon. The US dollar hedge class performance is a bit more mixed, as it has a different benchmark and that there is the currency hedging cost that changes over time. Nevertheless, it has outperformed the benchmark since inception. Even for the 5-year period, it lagged the benchmark by about 0.6%, which wasn't too bad. Let's do some performance chart comparisons next. In the market, the few other popular Singapore and Sing dollar focused short duration bond funds would be Fullerton Short Term Interest Rate Fund, United Sing Dollars Fund, and Amuva Short Term Bond Fund, which was previously known as Nikko AM Shenton Short Term Bond Fund, until they rebranded to Amuva at the start of September. Looking at the 10-year chart here, LionGlobal looks to have a small but generally consistent lead over the others. Shifting to 5-year chart, we can see Amuva has taken over LionGlobal in the ranks, as LionGlobal had a larger drawdown in 2022. On 1-year basis, LionGlobal is back in the lead and near identical to Fullerton. Here are the calendar year returns of the 4 funds for the past 10 years from Morningstar. As these are actively managed funds and no active manager can consistently be the best all the time, it can be seen here the funds take turns to outperform the rest. Nevertheless, LionGlobal Short Duration Bond Fund does look to have the most number of best calendar year performance among the 4. As for the US dollar hedge class, given there is a negative currency hedging cost effect, the overall performance of the share class can be quite decent. Here is a 5-year chart comparing to the most popular active bond fund in the market, that is PIMCO GIS Income Fund. We can see the two actually have very similar performances, and LionGlobal actually has a significantly less volatile journey. Of course, the strategies and exposures of the two funds are very different, so this is just highlighting the performance similarities, but not suggesting investors to consider switching one for the other. Before concluding this video, let me spend a few minutes to talk about the ETF version that will be launched soon. This is actually not a separate product, but is instead a new share class called Active ETF Sing Dollar Class for the LionGlobal Short Duration Bond Fund. This new Active ETF Sing Dollar Class is currently undergoing IPO from 8 September to 23 September, 12 p.m. Singapore time. after which it will be listed on the Singapore Exchange on 29 September and traded as an ETF. It is important to note that the ETF can be traded in both Sing dollars and US dollars, whereby the US dollars price looks to be just a FX conversion from the daily Sing dollar price instead of a currency hedge version. The confusing part here is that regardless if you buy the ETF in Sing dollars or US dollars, all the units bought will be consolidated into a single holding, and you can sell the holdings in either Sing dollars or US dollars. So this is very different from buying the normal Sing dollar share class and US dollar hedge share class of the fund. The active ETF Sing dollar class has a much lower management fee of 0.25% per annum, because there are no distributors in this case, and therefore no trailer fees to be paid out. So this aspect is definitely better than the normal share classes. The TER, however, is unknown at this point, as some of the other expenses are fixed amount charges, and therefore, if the AUM of the share class is too small, these expenses can cause the TER percentage to balloon up. Therefore, it is important for this ETF to gain AUM quickly to a sustainable state. I would imagine at least 100 million Sing dollars as something the fund should try to achieve. At sustainable state, I think the TER should probably be around 0.35% or lower. The ETF also comes with a quarterly distribution frequency. I suspect the payout yield would follow the A quarterly distributing Sing dollar class, which would also mean there probably wouldn't be any meaningful NAV appreciation, as all the gains would likely be paid out. What is interesting is that the prospectus also elaborates on the possible trading processes of this new ETF. The normal process would be the usual intraday buying and selling on the stock market, where you will be subjected to price fluctuations and as well premium or discount gaps, and the liquidity is entirely dependent on whether there is an opposing trade that matches yours. However, the second process would be to trade direct with participating dealers who are authorized to create or remove units from the market. The criteria is very low at just minimum 50,000 units, which translates to around 50,000 Sing dollars, given the initial price of the ETF is 1 Sing dollars, and the NAV is not expected to appreciate much. Of course, this is dependent on whether the participating dealers are willing to entertain your trades, or if they have any other undisclosed criteria. So do check directly with their trading teams if you are keen to explore this route. The share class webpage also provides a quick comparison of the normal share class versus the new active ETF Sing dollar class. In essence, this really comes down to 4 considerations. The first is if you are investing with CPF ordinary or special accounts, the new ETF class is a simply no-go. The second is that the new ETF class clearly looks to be cheaper, with lower management fees and no subscription fees needed. However, do assess any other fees aspects or considerations. For example, some platforms charge a different custody fee on funds versus ETFs. You may also be able to get subscription fees waived on the normal share classes if you negotiate with your banker. Lastly, if you have access to the iShare class, it has the same 0.25% management fee, making it on par with the ETF class on fee considerations. The third is a more personal preference of whether you prefer the trading process of mutual funds or ETFs. With mutual funds, there is a single NAV per day with no premium or discount gap, so all investors get exactly the same NAV for trades done on that day. Liquidity is guaranteed by the fund provider, so your trade will always get accepted in normal circumstances. With ETFs, you get intraday price fluctuations with premium or discount gaps, so there is a possibility you might trade the ETF slightly cheaper or more expensive than it is worth. The liquidity is also dependent on whether there are matching trades on the secondary market, so you may not necessarily get your trade done. There is no right or wrong on this one. Personally, I prefer the mutual funds way as I find that simpler and cleaner. The fourth is specific to US dollar investors. The ETF class is giving a US dollars unhedged performance, while the normal share class is US dollars hedged, so they will end up with rather different performances over time. Therefore, do consider carefully whether this new ETF class is suitable for you, before diving head-on simply because it is a hot topic currently. With that, let's summarize our findings. LionGlobal Investors is an asset management business under OCBC. While the overall AUM doesn't look too big, it does get ample support from the wider OCBC businesses. The fund is managed by Toh Jie, who is the head of fixed income and multi-asset solutions in the firm, for about 7 years now. This reflects the importance of the product in the firm. The fund strategy is pretty straightforward. This is a Singapore and Sing dollar focused short duration bond fund. It is also good that the prospectus included some information on the investment process. While establishing a benchmark for the fund is a good practice, having different benchmarks for the Sing dollar and US dollar share classes is rather uncommon. The number of holdings in the portfolio looks a little low for a bond fund, so perhaps the manager can consider broadening the exposures to more bond issues. Going for more US dollar bonds, then hedging the currency exposure back to Sing dollar might be a way. Some of the underlying fund positions are also questionable and looks unnecessary. The NAV of the distribution share classes look to be maintained in a tight range, so while there is little prospects for capital appreciation, at least the fund is not sacrificing NAV to make up for higher but unsustainable payout yields. The fund has exhibited relatively strong performance versus other Singapore and Sing dollar buyers short duration bond funds in the market. In conclusion, this is a worthy fund to consider for its category. The new ETF share class serves to offer more ways to invest in the fund, although whether to go for the ETF share class or the normal share classes is subject to a few considerations, and also depending on personal preferences. So do research carefully before making a decision. This concludes my absolutely biased comments on the LionGlobal Short Duration Bond Fund. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.